IMF had sent a delegation in Kenya in 2012 because there were proposals by MPs, the 10th Parliament, to push for interest rate caps. But the delegation that had been sent by the International Monetary Fund basically was against the proposals by the MPs then because IMF felt capping interest rates would actually benefit the minority in the economy, and those are the guys with more money, the wealthy guys, while access to credit to low-income earners would be stifled because of capping interest rates. So basically, that's why IMF sent a delegation in Kenya by that time. Lower interest on loans in the banking sector, on one hand, benefit the economy because the low-income earners are able to service their loans promptly when the interest rates are low. And basically, when guys are able to access loans from banks, the economy benefits positively because we have more money. Guys are able to open up businesses, and actually, even if a guy wants to pay school fees for their kids, they'll be able to do it because they know they'll go to a bank and get an affordable loan because the interest rates are basically at affordable levels. That would be difficult to say if some banks would actually get an added advantage with capping interest rates. But the basic thing that, like even the Kenya Bankers Association has said previously about capping interests, is that it would be it would bring a negative impact in the whole banking sector. Because one thing, customers, when interest rates are capped, there's no way that they're going to be at lower levels. So basically, they'll most likely be above 15%, and very few customers will be able to access loans. So these will actually make banks be unable to make profits, because one thing, when customers are unable to buy loans, banks are unable to make profit. And when banks are unable to make profit, it also means even the Kenyan economy is unable, Kenyan economy will grow at a slower pace, because one thing, banks contribute very big taxes to the government after they post profits, of which if they don't post profits, there will be no taxes paid to the government. Secondly, when interest rates are capped, banks will make fewer money from customers, so they'll also be forced to cut jobs because they have to trim their operational costs. And when any organization is trying to reduce costs, the first people they go for are the employees. So basically, when we cap interest rates, most banks will have to trim their salary costs. So it's difficult to say whether some banks would benefit from a controlled interest rate regime in that perspective.